Hey there, folks. Welcome to today's episode of the Strategy and Leadership Podcast. It is my distinct pleasure to chat with Joe Keeley, who is the CEO and co-founder of JustiFi. Joe, what's happening today?
Not much. Glad to be here. Thanks for having me.
I'm excited. Why don't you tell our listeners a little bit about who you are, and then we'll jump into some questions about the money that's right behind you.
Excellent. So, my name is Joe Keeley, and I am the co-founder and CEO of JustiFi Technologies. We are a payment provider for vertical SaaS platforms and fintech orchestration. Who I am beyond that, I've run a couple of different companies, most notably a childcare platform that had about 10,000 employees. So I was remarkably unqualified to run a fintech orchestration platform. A couple of kiddos, wife, and I live in tropical Minneapolis, St. Paul, Minnesota.
That's awesome. Well, I'm glad that you brought up the fact that you were unqualified, but if we look at that and we say, hey, the mission, the purpose of your company now, people are paying too much in transaction fees. Is that basically what I understand?
Yeah, I mean, my partners had some really unique experience building a vertical platform. And what a vertical platform is, a software platform that a particular vertical might use. They provided software in the youth sports space. And what they found, what I think a lot of businesses have found, is that the payment processing and the fintech space is very sort of, up in the clouds, perhaps on purpose. And we've sort of been lulled to sleep that, a transaction should cost 3% of your every time that you swipe it or run it on your company. And that becomes, trillions and trillions of dollars. And what they found out is that, number one, that's not the case. And number two, there is just tremendous potential that someone can unlock if they understand this sort of payment and fintech landscape, which is a word that's thrown around a lot. So we created JustiFi from that experience. We created it to be different and better, and to really accelerate the potential of other platforms that, and hopefully do that in quarters, not years, because both my partners and I have grew some other companies, and after 15 to 20 years said there must be a better, faster way to do this. So we're sort of multi-time founders and entrepreneurs, and we're trying to do things just a little bit smarter than we did the first time.
That's awesome. So what are the similarities and what are the differences between running an established business like College Nannies versus a startup like JustiFi? What are you learning so far?
Well, certainly, I mean, when I was running College Nannies, it was, I started it in a dorm room, and then, over time became an organization that was much larger than that, at a couple hundred offices. And so certainly it went through the evolution and is different than a startup, but I'm actually retaining some of the startup, but bringing forward some of the more mature company practices that I kind of had to learn the hard way as my sort of my graduate degree in business, as I was running a company, and just trying to, bring those things earlier to the company. So, whether that's being better capitalized earlier, understanding the importance of that balance sheet, understanding and not being afraid of going after and hiring top talent and letting them do what they need to do. Systems and processes that, I think all too often, there's great innovation that can come from shooting from the hip, but there also is a need to have some structure in place. So those are the things that I tried to bring forward into the startup experience that maybe I just didn't know what I didn't know the first go around.
That's awesome. So what, as a CEO, how do you like to think of your game? What's your strategy? How do you approach it? What do you do as a CEO that you find delivers you success consistently?
Well, I think it's a lot like parenting, actually, in some regards. And not that I'm parenting my employees, my colleagues, anything like that. But I think, there's in parenting, I think it's important to have a few simple rules, repeat them often, and be consistent. So then in the company, it's, knowing where you are and being really clear, this is where we are. And then being clear of saying, this is where we're going to go. And get alignment on that. And then, encourage the team to ask the third and most important question there, which is, what needs to happen for that to happen? And then ask it again, and then ask it again, and ask it again. So where are we today? Where do we want to be? And what needs to happen for that to happen? Are essentially the pillars of strategy, I think, really boiled down. And so I try to, I get too much on my plate to try to live different, remember more rules and, have different ones at home than I do at the office. So that's why I draw the parallel, and not just because I grew a pretty large childcare company prior to this, but it seems to work.
No, that's awesome. I mean, when we look at our strategic planning process, it is verbatim. Where are we now? Where we want to get to? We've since added what's going to get in the way. What do we need to do to get there, and how are we going to roll it out? But that's too many for most people to understand. So I like that three-step process. As a CEO, obviously the industry is different than in 2021, so almost 20 years later. How would you say the marketplace is different when you first started your business in 2001 versus what you're seeing now in 2022 and beyond?
Well, I think that just the tools available to to startups today are just sort of astounding. When you think about how has technology progressed in the last 20 years, I mean, it's the last 20 years is unlike any other 20 years, and I'm sure the next 20 years will be the same, as they say. So as I look at what did I want to do next, I wanted to be in sort of one of the biggest industries I could. I wanted to be in and around, innovative technologies, and I wanted to help other entrepreneurs, small businesses, and hopefully, do some right in the world. So, when we're providing payment infrastructure and helping platforms who in their own right are bringing technology to, mom and pop businesses on Main Street, it's really truly amazing how things have progressed. So for example, our customers today for JustiFi, we provide, this infrastructure for vertical SaaS companies. So software as a service companies. If I run a youth sports league, I run a barber shop, I run a funeral home, they all have software specifically designed for them. These softwares are, CRM tools and inventory management and scheduling systems. So, examples of that are, there is Sports Engine or Team Snap for a youth sports league. There are MindBody for barbershops and Virago and things like that. There's even a software platform called Gather for funeral homes. So all of these technologies, really didn't exist 20 years ago, where I could start a business or take over my, sleepy family run business and start inserting technology and have tools that would cost millions and millions of dollars to create before. I mean, I think, spinning up a Shopify store as an example, so the technology that's available and not having to build it yourself is just so super astounding in terms of the speed in which someone can get to market and compete with some, pretty big companies that are out there. I think on the flip side, those big companies really need to think about, wow, we can get a competitor going after a little bit of our niche that gets spun up in a day or a week, whereas that used to be a big moat, those barriers to entry for those incumbents.
Are you targeting the larger ones, the smaller ones, pretty much everybody that could see that would want to pay less than 3% on their transaction fees?
Well, we help platforms actually make money on their payments.
Got it.
And we help platforms launch other tools in the fintech stack. So we help them sell insurance, embedded lending, card issuing. Our platform that we came from, 85% of the revenue came from embedded fintech and other products. So that's really the SaaS plus opportunity. So we are looking, if it's a vertical market, a software provider, regardless of size, we're working with pre-revenue companies, and we have companies that process billions and billions of dollars a year. So, really we have a place for all of them, because, small platforms can become big platforms pretty quickly. So we have a startup program specifically for those smaller, newer ones, where we're providing them some, no cost really consulting of sorts too, because there's a lot of strategy that goes in this. When someone, let's say, builds a software platform, this stuff can't be done only with an API. A lot of times, you need to talk to someone who's been there, and that's something that we're bringing that I think is lost. I think a lot of venture-backed tech companies think that they need to be only tech. And I think that having great tech is really important, and it's scalable, but you need to do things that aren't scalable too. And, you need to bring, energy and expertise and humans to the table, and people want to partner in that way. So that's where we've had some early success as well.
Cool. I think that's really neat. As a company perspective, you cannot compete with some of those bigger people. So you have to compete on like the wow factor. So what are you bringing in that is not scalable? Because that's where you can beat the people that have, designed to scale. The other thing that I think is really cool is, of course, the strategy, but Web 2, where everybody was spinning up shop fronts and saying, hey, I have a store, where I'm seeing the biggest opportunity in the future is platform economies. And I think if y'all do a really good job, which I'm sure you will, of acquiring the customer, and then you're able to upsell, cross-sell, downsell, but serve at the right thing, I think that's a really neat opportunity for the platform to take advantage of that stuff that you do really, really well. You had mentioned big companies being wary of, or should be wary of, small companies that might come in and take a slice, if not just a small one, of their pie because of their ability to move. Behind you, you have I don't know what it is, a 200 rupee note. And so as you sit where you sit in Minneapolis, and you look at the socioeconomic global perspective, how do you see the future of international markets and kind of global expansion now that technology has really leveled the platform for everybody, or leveled the playing field for everybody?
Yeah, I think that, it's just simply put, our world feels and a lot smaller even than it did just 5 years ago. So I think when you look at the impact that negative things in our world have, whether that's issues with Russia and Ukraine, or supply chains and other things, we're all really interconnected. And I also think that one's ability to start a business and get up into business very quickly, the same sort of acceleration exists with someone's ability to go beyond borders. Because I think that there's goods and services in the developing world that are wanted and needed in the US, for example. We talked to a platform just the other day that their entire business is bringing small lots of artisan goods to major retailers in the US. And how one sources and bundles and ships and, yes, move this money is going to be particularly important. So platforms will become national way faster than they thought they would, and global way faster than they would. So I think seeing around that corner is one thing that we try to do with platforms, where every basis point may feel like it doesn't matter today because you're just building out your product and go to market. But you don't want to get locked into a single thread problem that then you have to undo later when you are scaling, because every basis point really does matter at scale. And, my partner's company that they ran that we really are executing the playbook here at JustiFi was a vertical SaaS platform in the youth sports space. Mm-hmm. And when I tell folks, so they were providing software for youth sports organizations to run their leagues like T-ball and that sort of thing. When I tell folks that they were, really, really good at payment monetization and lending to the youth sports, so they're making money on the lending and selling registration insurance and cart and spend management, they said, wow, that seemed, at one hand, when you think about strategy, you could say that's like a distraction, that's shiny stuff. But when you look at the business not as a software company providing, their economic engine, that is, not as, the latest feature to help manage tryouts, but rather as monetization of all the funds that come in and the funds that go out. And then I tell you that they processed $4 billion a year in youth sports payments. People are like, wow. And then any parents listening know, like, well, yeah, that checks. I do spend an awful lot of money on my kids' youth sports. So I think the point is that, thinking about and looking, into the future and at, making good moves, which is, good strategy. Where do we want to be? And so that you don't have to, so that you can have room to run is really, really important. That could be international currencies. It could be next products, but so oftentimes we sort of go with the status quo just to kind of check the box, but it does have significant consequences.
Yeah, absolutely. That's, one of the biggest, like the most notable kind of story that I heard of in that space, or that I know of that's easy for people to know, is like the Starbucks app. And they're like, yeah, preload your card. Like, we'll, hold your balance. So I've got a $20 balance with Starbucks and it'll stay there for a while. And then they will automatically deduct my PayPal, but they're holding like billions of dollars of equity that they're earning money on. And then if you look at like Avis or whatever, anytime you rent a car, stuff flips over. So I just think it's cool. There's a lot of opportunity there. So last question for you, Web3, what do you see the future of that being? And we're back to the Strategy and Leadership Podcast. For those of you watching on YouTube, you might notice that I'm in a different shirt. Joe's in a different shirt in a different location. Fun fact, while we were recording the podcast, my backyard got set on fire, and Joe was gracious enough to say, you should probably deal with that, and we can continue our interview later. So here we are, joined by Joe Keeley. Joe, how are you on today's day, fireless?
I am doing terrific. Glad that you are in your home still, and it's a fireless day. That's great.
Perfect. And you're still the CEO of JustiFi Technology. So when we were talking last, and my last question to you, or maybe not last question, was, we're talking about the payments, we're talking about the work that you're doing, we're talking about like the technology. I was going to ask you about your perspective, thoughts on Web3, on how just like the future of technology, crypto ledgers, all of that stuff, does that play a part in some of the work that you do? And then how do you see the future of kind of that world of technology? It's a big question, but we'll take it from the top.
Yeah. So would you, I think that the Web3 has its own, curve that it's going to be on, but I think that there's even like a Web3 like world in payments and embedded fintech. So, if we look back at some of the the venture firm, quotes that have been put out there where, a decade ago, software is eating the world. And now it's, every company is a fintech company. And we talked a little bit about that. So we think about payments, like the first online Web1 equivalent would be, I'm able to conduct business online, Wow, that's pretty impressive, actually, when you think back in the history. And then That's where PayPal came on the scene, and all of those sort of things. And then web 2 of payments, where we are today, is this notion that someone other than Visa and MasterCard can participate in the monetization of payments. So that's where you see a platform that charges market rate, where they're making their money on the arbitrage of payments. And we very much help platforms accomplish and get in the game. The web 3 of payments and embedded finance, and we love to talk about, throw fintech around, where we think about like, well, what does that exactly mean? The web 3 of that is really where every company could harness the power of embedded finance. So that means that, that's where you get some of these neobanks, you get some of these, card issuing, and where if you take a full stack of all of these tools and put them to work inside of one's platform or business, that's where all of a sudden, you find yourself in the payments game, and in the lending game, and in the insurance issuing game, and in the card issuing game, and vendor management. And when you add up all of those basis points, it can be actually the main driver of economic value and in the platform. So that's pretty exciting, because I think it's, when we think about financial technology and just the movement of money, it has historically been reserved for the very, very few. And now this democratization of that technology allows, a startup platform to offer lending. Like, that's kind of crazy to think about, but it is here. It's the same way if we look back on infrastructure, where, to get in the game of have a website and hosting servers, like, it costs millions of dollars and had to have your own server farm. And now, you can spin up a site and, leverage a variety of different hosting services from, Amazon, web services and others in a matter of moments. So, I think when we think about more of the true web 3, that's what it's doing as well. It's democratizing and making it more accessible, which I think really allows for, startup entrepreneurs to compete in a very, very meaningful way, much faster than they have been able to in the past.
Cool. For like one book I really enjoyed, I had read several years ago, was The Ascent of Money, and understanding how the construct of money, currency, gets created, and history tends to repeat itself. So I'm sure that there's lessons from there in the future. Just one of the things that jumped out to me as you were sharing that is like the impact on small town credit unions and banks. Do you see that industry being disrupted, or do you see the flip side, which it'll enable them to have an even greater scope where they could provide a wider breadth of services because they're not limited to their geography, or a bit of both?
I think it's probably both. It's how you decide to participate or not participate in it. I think that for some, like if you're serving leading bleeding edge customers, then you probably need to have crypto earlier on your roadmap. But, I don't agree with, crypto fanatics that say, look, credit union in, Northwest North Dakota, if you're not offering this, you're going to die on the vine. It's like, no, there actually are a lot of people that want to go in and have a relationship and conduct business in that way. So I think it's really about understanding your customer, solving real problems and add real value to them, and just try to stay a step or two ahead of that. And it's where folks trying to be, everything to everyone, or, lose focus of where their unique ability is, where they can get distracted from what I call shiny stuff.
Yeah, I find that fascinating. My most recent experience with a type of platform was, we're going through the process of hiring our first US facilitator. So instead of setting up a shop in the US, we're setting up through an employer of record. Well, that employer of record then offers our health benefits through there. So not only are they collecting our payroll, holding that money on, transferring it around. They're collecting our insurance, holding that money, moving it around, and then they're redistributing it for a fee to the employee. And then in that, they can also, you can pay by bank, ACH, whatever, and crypto. And you can do it in percentage. So if you wanted to like slice off little tranches to where you put your money, and I just think it's fascinating that they're taking that financial platform model and then banking and leveraging it to the tune of, I mean, hundreds of millions of dollars. So the possibilities are endless there. And then I think it will just begin to see what that looks like, as you had given a couple examples earlier. As we wrap up, with no fires this time, what is something that you're kind of on the edge of for yourself that's challenging you, that you're super engaged in? Maybe you haven't solved it yet and you're just like working it through in your brain, that's like really exciting you and engaging you, you know, potentially above and beyond the work that you're doing at JustiFi.
Well, I am engaged in hand-to-hand combat every day in the adventure in parenting. Frankly, I have a 12-year-old and a nearly 17-year-old, and specifically with the 17-year-old, you know, we are navigating the college admissions process. So we're jumping on airplanes and looking at colleges and trying to help my daughter build a business funnel, as I tell her, you know, and we're doing this in a landscape that, you know, the whole college admission process is very different. Test optional is a very, you know, the rules are sort of, the goalposts are getting moved. So that's something personally that I'm digging into, and, you know, trying to enjoy the process, but at the same time, it's, you know, we're trying to find the right fit for our daughter. And so that's been a lot of fun.
Cool. I like that. One of the, as a new parent myself, one of my coaches says, you know, you're good at certain things and you suck as a parent, not because you suck, but because you've never had to deal with it before. So this is a new thing. You've never had to deal with it before, and you have to go through the disruption or discomfort of learning how to do it. Universities, another great option where they could create a platform economy. So if you know a university, tell them you know a guy. Joe, how can people learn more about you? How can they connect with what you're doing? How can they help your kid get into a university that they like, or become a customer of JustiFi?
Excellent. So JustiFi is I'm on LinkedIn, and also, you know, it's JustiFi. It's JustiFi.ai. And we're really looking forward to having more, you know, terrific conversations with platforms that, you know, are, you know, fintech curious, like how can they leverage the value of their ecosystem and, you know, and use that power of those tools that are out there, because it is complicated and it can be expensive, but it doesn't have to be. So that's really why we created JustiFi. We think that, you know, as chosen by our name, there are some things that aren't right out there in the, you know, payment processing in the financial world. And we want to make it just a little bit better and accelerate the potential of those platforms that we work with. So appreciate being on today. And, you know, thanks so much.
Absolutely, Joe. It's been my pleasure. And to our listeners, unfortunately, I've had a longer than average relationship with Joe, and every single conversation I've had with him, he's always curious. He's always looking at challenging, but he's also a straightforward shooter. So I can usually tell the caliber of a company by their CEO. So I highly recommend you check it out if you are fintech curious, because I think we're on the early stages of it. And I think that there's nothing but potential there. So Joe, thank you for being here. Thanks for being a friend. And I just really appreciate the time today.
Thank you.
Folks, this has been the longest episode of the Strategy and Leadership podcast, recorded over 2 weeks with a fire in between. I appreciate you watching. I appreciate you sticking it with us. I just appreciate who you are. Thanks for watching. Thanks for being here. I'll see you next time.